Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert and Lanny, the best dividend investors out here in all of social media, guys. The gosh damn Dividend Diplomats are back, and we're here to talk about, again, another two stocks to buy here in October 2024. At least two stocks to watch. Can they be great for your stock portfolio? We're going to have to find out.
Smash that subscribe button, everyone. Give that video a good old-fashioned thumbs up. We are closing in on 20,000 subscribers, so thank you, everyone, for that love and support over the years. You know what, Lanny? Let's see. No, we haven't done in a while. Swag giveaway. We get this
Oh,
video
let's do the October swag giveaway. Bert, what do you
giveaway.
want them to get today?
Let's hit, you know what? Let's get this one 300 likes, a subscription to the channel, and a comment below. If we hit all that, by the time next Saturday rolls around, we will give some swag away in that following Saturday video. So everyone remember, 300 likes, a subscription, and a comment below.
Let's get to 300, guys, and let's find some undervalued dividend stocks, guys. And today we're going to feature a dividend king. And then we're going to feature another stock that's actually surprisingly across double digits in terms of consecutive years of also growing that passive income stream. Again, guys, we're dividend investors. We're buy and hold. Bert and I have been cleaning up the portfolios a little bit. Definitely check out the last video of me selling two stocks and redeploying the capital right back into two stocks I already own. It's all about quality now, all about growth, all about passive income growth as well. And that's what these two stocks do. Now, Bert, the stock market's on a tear this year. There's no question. We're filming this here on October 3rd at night. We've talked about it. S&P 500 near all-time highs. What is it? 57-ish hundred right now.
Yep. Yeah, every day it seems to keep pushing new highs. Even when it comes down, it gets back up and keeps pushing those limits higher and higher and higher and higher and higher.
Which could be what we should expect as the cost of debt continues to go down. Other assets might get inflated here with other future rate cuts as well to see what's on the horizon. I know that they're already pricing that in as well for another rate cut come November. But Bert, we got to buy some passive income here. When's the last time you even bought a stock?
Individual stock, probably 4 weeks, I'd say. It's been a while.
Yeah, you've done it recently than that, I
Yeah,
think.
I've done it. What about you? Oh,
Well,
you
do we
just had
count?
your big switch.
Yeah. Do we
Are
count? Do
you
we count?
talking sale and redeploy or buying individual
I
stock?
think I bought PACCAR about 3 weeks ago,
Okay.
maybe.
Yeah, so we're on the same thing, about 3 weeks, 4 weeks each. So it's been a while. And you know why? It's just because there aren't that many great opportunities out there. There really aren't that many undervalued dividend stocks. We're building up our watch list. Check out yesterday's video where we talked through my two stocks. And now we're going to talk through two for Lanny. Just because you're putting them on the watch list doesn't mean it quite hits that buy zone yet. And that's the piece. We're not quite there, but we are closely watching these companies because they're getting oh so close.
So let's dive in. Stock number one, Dividend King, PepsiCo, ticker symbol PEP. Now, interesting thing is Pepsi just announced a little bit of a news here, didn't they, Bert?
Someone's getting acquisition happy. Talk about
Uh,
lower cost of debt, and Pepsi is not messing around here. They're trying to expand. I think it was
the
what?
Siete Foods, the
Thank you for
not
pronouncing it because I was going to botch it if I pronounced it. I know the
oh,
acquisition was for.
somebody correct me as well. I mean, it's a billion-dollar,
Yeah.
acquisition that they're about to do. A very clean snack company,
Hmm.
which is great because that's why we like Pepsi. Not just because they have this beverage line, but because they have that snack line. And then with the mindset of the consumer right now going less seed oils, lower fat, lower cal, higher macros, like here's a snack branded company that's going to fit that niche that they have.
Yeah, it's exciting to see. Exciting to see some moves being made. I'm with you. That's why we love Pepsi. The question is, do we love their metrics? So let's run them through the screener here. Let's see. Let's kick it off. Let's look at that price to earnings ratio, Chico. Their price is 168.53. EPS $8.14. It's a PE ratio of $20.70.
Not the lowest, not the highest. It's there. It's there, we'll say.
Yeah. It's Pepsi, though. You never expect Pepsi to have a super cheap valuation. They're a great company for a reason.
Yeah. Now, payout ratio, they pay $5.42, obviously broken out quarterly. I think it's like $1.35 and a half. Yeah, somebody can actually check me on that. I'm going to check myself. But their payout ratio, which is again the safety to the dividend, we like it 60% as a ceiling. PepsiCo or Pepsi is actually a little bit higher. It's at 66 and a half, 66.6% right now. So
Yeah. You definitely want to see it below 60, but it's not the alarming part. There's still room before they have to get in that dividend danger zone, which we don't want to see them in.
that danger zone, the Kenny Loggins.
Yeah, their 5-year dividend growth rate is 6.84%. They've increased that dividend for 52 years. Yes, they are a dividend king. Although they didn't make our video we showed last week, or it was on Monday, just on Monday, about the 10 dividend kings with the largest consecutive dividend increases. They're not on that part of the list, unfortunately.
Wow, man, what a beast. 3.22% yield, above their 2.86% yield, get a little bit of margin, down 5% the last month. So again, they're down. That's why they're back on the watch list because again, they're down year to date now again because they're down 5% in this last month. They're a 232 billion market cap company. Again, 20 PE, 67% payout, 52 years of growth, almost 7% average growth rate. I really like them at or below $162. That's where I'm at.
$162. That puts their dividend yield at 3.35%, $6 away from it right there in a good spot. Or you number two, everybody remember contest. If you want some free swag, 300 likes, a subscription to our channel, and a comment down there below. All right. Number two,
Let's
Lanny.
have some
Who
fun,
are we?
guys. We want to give out some swag. It's Halloween. We got Thanksgiving and Christmas coming around the corner. We want to give out a hoodie. Maybe it's a crew neck. Maybe it's a t-shirt, coffee mug. We want to send it your way. 300 likes. Let us know which stock, if you like Pepsi, below in the comments. Subscribe.
All right, let's do it. Number two, Lanny. Who is number two?
So, it got me thinking a lot because I've been bashing Dow Chemical a lot. No, Dow is not the second company. Lionel Basel is still in back, kind of coming in, coming off, coming back on my watch list. More so because they're down recently, down about 1% the last month. I know it's not a lot, but they're down now this year. They're down 10% in the last 6 months. So they kind of had like one of these and then one of these, and
Hmm.
up and
Hmm.
down.
Okay.
So, and they're in the chemical, kind of in that industrial space here, guys. 30 billion market cap. They're trading just under $95 a share. So they're coming back below that $100 a share. They're back below 95
And
now.
so let's see how they look here. They're at 94.87 at the time of this video. Earnings per share $7.76, a PE ratio of 12.23. So yeah, that PE ratio is definitely coming back down to earth here.
It is. It is. Now they pay $5.36 annually, obviously broken out over 4 quarters, which represents $1.34 per share per quarter. Payout ratio, again, similar to Pepsi, which this is the part that I don't like. It's at 69%.
Same reason. I already said my spiel about Pepsi, so still not concerned, but you want to definitely see it lower.
This doesn't make you concerned when you look at Dow's payout ratio.
No, hey, they're better than the industry. What can I say? Better than the industry. It's 100% everybody. If you didn't pick up on that, Dow's payout ratio is 100%. Hey, hey, they're beating the comps, man. That's really what matters. All right.
Everything is fine.
Said dog in the house that's on fire. Their 5-year dividend growth rate is 6.82%. Years increase 10 consecutive years. Love it.
So the dividend yield with the stock price coming back down is now back well over 5% at 5.65%, which I believe is higher than Dow Chemicals as well right now. So just that's why it's making a little bit of sense right now.
Yeah, it's interesting. It's interesting.
Now, this 5-year average yield obviously includes there's those they were in the low periods, it includes some maybe a massive special dividend, it includes quite a bit of stuff here.
Had the best of times, they had the worst of times, but hey, their regular yield right now is 5.65%. Year to date down 1.77%, 6 months down 10%, 1 month down 0.89%. So as you said, little bell curve here for Lionel Basel.
Yeah, and I'm a little bit more, not to say I'm running to buy the stock right now. It's on the watch list. Again, I like adding to current positions. One thought is do I take Dow, sell and swap it for LYB? What do you guys think on that right now? This could be your comment to enter and like this video, 300 likes, comment, subscribe, swag giveaway from the diplomats. Or do I just wait until it gets to, sub 90, that 88 to $90 range and just scoop up a couple shares? That's kind of the price points I'm looking at right now. But Bert, what's your take?
Both are great companies, like I said yesterday for mine. Close to the buy zone for me. They sound like they're both close to the buy zone for you. Still got a little room to go, but they're great companies. I own both of them too, so I very much respect that you want to keep building your great positions. That's really what matters here, growing that passive income.
Well, guys, that's Pepsi. We're going to throw them back up here on the screen. Pepsi and Lyondell Basel, two stocks. Are they two stocks to buy right now? Let us know in the comments, like and subscribe. Let's get the 300 at least likes on this video so we can send you one lucky winner some swag giveaway from the Dividend Diplomats. Oh, we'd love doing that, guys. So let's get there. It'll help us also get to that 20,000 subscriber mark. What other stocks are you guys buying? Let us know in those comments for real.
Yep, and remember again, subscribe, like the video. What else do we need to tell everybody, Lanny?
To be the man, you got to beat the man.
I do love
No,
that. I do love that one. I'm not gonna lie.
you
That's
do.
always one of my
Or,
favorites.
or is it the Brett? The best there is, the best there was, the best there ever will be.
That's a great one. I'm all on board.
We can keep going all night, guys, but you're either with us or you're against us, Jack. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.